Welcome back to Crypto Wealth Daily, your daily edge in crypto. Today, we're covering a massive story that could reshape the relationship between Wall Street and digital assets. For decades, traditional investors measured stocks with benchmarks like the S&P 500 or Nasdaq. But crypto never had a trusted index. That has changed with the launch of the S&P Digital Markets 50 Index, a breakthrough step toward mainstream adoption. This new index is groundbreaking. It officially combines 15 of the world's leading cryptocurrencies with 35 publicly traded blockchain companies. Think Bitcoin, Ethereum, Solana, and XRP, alongside names like Coinbase, MicroStrategy, Galaxy Digital, and Robinhood. For the very first time, digital assets and equities are being measured together under one credible benchmark, making it easier for investors to understand and allocate capital to crypto. Even more innovative is the tokenized version of the index. Through Dinar's D-Share platform, investors can buy a single digital token that represents exposure to the entire basket, both cryptos and equities. This dramatically lowers the barrier to entry. Instead of figuring out how to buy and store dozens of different assets, institutions and everyday investors alike can gain diversified exposure with one move. This could speed up mainstream adoption. So what exactly makes up this index? On the crypto side, you've got the major players, Bitcoin and Ethereum holding the largest weights, followed by Solana, XRP, Cardano, Chainlink, and Polygon. On the equities side, the index features blockchain giants and innovators like Coinbase, Block, Robinhood, MicroStrategy, and Galaxy Digital. Together, this mix gives investors a broad and representative look at the digital economy. Importantly, the index is designed to stay balanced. Each component is capped at roughly 5%, so no single asset dominates. This ensures it isn't just 80% Bitcoin and Ethereum, but a fairer representation of the whole market. It also rebalances regularly, keeping it fresh as the industry evolves. That means emerging players could gain exposure in future updates, giving investors a dynamic snapshot of the crypto sector. Here's why this matters. Institutional investors rarely move without benchmarks. They've had the S&P 500 for stocks, the Dow Jones for industrials, and the Nasdaq for tech. Until now, crypto had nothing comparable. With this launch, S&P Global is giving hedge funds, pension managers, and family offices the green light to finally compare performance and allocate capital into crypto in a framework they already trust and understand. That kind of recognition is validation. It signals that crypto is no longer sitting on the fringes of finance. It's being measured side by side with the world's largest corporations. And because the S&P Global name is attached, the index instantly carries credibility worldwide. That credibility can help cautious institutions feel more confident, which could open the floodgates to billions of dollars in new investment inflow. At the very top of the index are Bitcoin and Ethereum. Bitcoin is widely described as digital gold, decentralized and capped at 21 million coins, making it a hedge against inflation and currency devaluation. Ethereum, on the other hand, is the backbone of decentralized finance, Web3 apps, and NFTs. By giving them the heaviest weights, S&P is officially labeling BTC and ETH as the blue chips of crypto. By positioning BTC and ETH as blue chips, the index makes it far easier for large money managers to justify holding them in serious institutional portfolios. It's no longer just speculation, it's recognition. This also opens the door for ETF-like products that could track not just Bitcoin, but a diversified slice of the entire crypto economy that could funnel long-term inflows into BTC, ETH, and the broader altcoin market. At the end of the day, this isn't just another index, it's validation. crypto is being woven directly into the architecture of traditional finance. The Digital Markets 50 could become the bridge between Wall Street and DeFi, finally connecting to worlds that have remained separate for more than a decade. For investors, it means more legitimacy, more stability, and a much larger opportunity as crypto steps into the spotlight. This video is for educational purposes only and is not financial advice. Always do your own research, never invest more than you can afford to lose, and consult with a licensed financial professional before making investment decisions. Crypto remains a highly volatile and speculative asset class. And while the S&P Digital Markets 50 Index adds legitimacy, risk is always present. Manage your exposure wisely and stay informed.